The insurance is simply going to give you, it's going to reduce the amount of damage that you take if something bad happens. It's prohibitively expensive to buy puts and try to make them into a profitable venture, because then what happens is you go from being a bullish investor to being a bearish investor. Now, if you're a bear, bears did very well today. The market went way down and the bears made money, and the bears are saying, haha, look, I told you so. And that's true. But the problem with being a bear is that the market generally is very bullish. The market is super strong. In fact, I dare say that I would not be surprised in the least if Monday becomes the greatest day ever in the market, because the market tends to overreact. So it goes way down and people freak out and start selling, and then people that hold on, they make an insane amount of money like a couple of days later. Most of the time, historically, you remember when I did research on this a lot when I was on the faculty at Syracuse. Basically, most of the time, when the stock market has its best days, it's usually right after its worst day. And when it has its worst days, it's usually right after its best days. That's because it's like this, it's almost like a seesaw of leverage. When it shoots way up, it'll come way back down, just like somebody smokes crack. They're gonna be real, real high, then they're gonna crash, and then after they crash, they're gonna be real high again. So the stock you're dealing with the stock market on crack. So you just call it the Hunter Biden stock market. How about that? I'm being stupid. All right. So here, Lee says, please explain the difference between stock options and an ETF. Okay, an ETF is an exchange traded fund. You can sell options on an ETF. I don't have any ETFs I sell options on. They don't tend to do so well because by definition, ETFs minimize volatility, which reduces the amount of premium that you can earn from the options. However, there are ETFs out there that you can sell options on. If you go to the options income calculator that I just showed you, I bet you that you can pop in a lot of ETFs. Let me think. What's the one? The one that I like, VOO. So if I pop in VOO and I have 500 shares of VOO, it tells me the current price of it right here, according to this, is $600. So if I sold options with a strike price, ooh, look at that. Wow, wait. Oh, VOOs. Okay, $600. So 100 shares of that thing is $60,000. So you're really talking about $300,000 worth of assets. But many of you are actually already there. You'd be surprised how many students have been saving for a long time, putting money in their 401k, stuff like that. So $300,000 or let's say you did it as a family, you could take that VOO and you could sell a call option and pick a strike price of say 620 and make $2,000 a month. That's pretty good. That's better than going into real estate almost, right? And it's a pretty safe strike price. So yeah, I think VOO could be used, but I wouldn't do it because I like stuff that has a little extra spice to it. But that is something that is quite doable, 100%. Let's see, Cass, have you or do you invest in REITs? Yes, I do. Real estate investment REITs are beautiful because they have so many different types of REITs out there for all different kinds of real estate investments. A lot of people think that to invest in real estate, you got to go buy real estate. You ain't got to go buy real estate. You can buy a real estate investment trust. And ultimately, that gives you the exposure that you're looking for. They pay good dividends. They'll give you, you can find different types of real estate. There are companies that focus on nursing homes. There are companies that focus on data centers. So if you go into your app and you type in REIT, REIT, you will find examples of all kinds of REITs you can invest in. Schwab has multiple REITs. Vanguard has multiple REITs. REITs are everywhere, and REITs are not super exciting investments per se, but they will keep your money relatively stable. I'm willing to bet you that real estate investment trusts probably didn't get hit as hard as the other stocks did when this tariff thing kind of popped off, but I have to go look at that. Let's see.